What are the lessons learned from 2018?
Well, the first is that when monetary policy gets really tighter, especially in the US, equities and bonds tend to struggle. The second is that Europe has this incredible ability to disappoint. 1 year ago, everybody was very optimistic, and now everybody's worried about Europe. And the dollar, a strong dollar, is always bad for emerging markets.
What major changes in financial markets do you expect in 2019?
The macroeconomic framework is not very different. Growth is weakening, inflation is still relatively high, tighter monetary policy. But what has changed, investors are much more cautious, much more bearish, and this gives a little bit of upside, maybe in the short term.
Do you expect a further escalation of the trade war?
No, we don't expect any escalation because we feel that also the US now has a big incentive to find a short-term solution because the US economy is also weakening and Trump is a little bit in trouble.
What developments in Europe should concern us?
There is a lack of economic momentum in Europe, especially in Germany, and I think the main concern we have in Europe is the political situation. It doesn't look like it's going to get better. There are elections, Brexit, very concerning.
Where do you see the best opportunities for positive returns?
For sure in emerging markets, because we feel the dollar has peaked, emerging markets are cheap, but also in US bonds, US treasuries, inflation-protected bonds. This is where we see the most potential.